My name is Dawie Roodt and I'm speaking to Martin Kift. He's the director at Verso Investment Services about something very important. Hi, Martin.
Hello, Dawie.
In a recent budget, there were some announcements regarding retirement, how much you can deduct for tax purposes and the like. For example, there were some changes to the removal of the pensionable contribution part, for instance. But you reckon that there's a small limitation now, a limitation of 350,000 that you are allowed to contribute for tax purposes to a pension fund. Is that correct? Is that important?
Yeah, that's very important. The reason for this cap of 350,000 is that the National Treasury isn't interested in funding the so-called super rich retirement. To give you an example, most directors of listed companies earn significantly more than 1.3 million. Now, you would already reach the cap of 27.5% just on that type of earnings. Also, if you look at some of these directors, got a lot of share options that are vested, and when these share options vest, they can exercise these share options, and that gain that they make on these share options will form part of your normal taxable income. That gives you the opportunity to make a retirement annuity contribution, and by making these contributions, you will save tax at 40%. And this opportunity only exists until the 28th of February 2015.
Let me just understand this correctly. So if I earn 1.3 million and I contribute 27.5%, for instance, I'm limited to 350,000, and that's it. If I've got some share options or some other kinds of income, then I still cannot contribute for tax purposes more than 350,000. Is that correct?
That's correct. In the past, we've saved some of these individuals millions in terms of tax that they received back from the receiver of revenue. And some of these individuals, if you look at the listed companies, they can make additional contributions of up to 10 million rand just on these gains. And that's not even taking into account the normal bonus schemes or deferred bonus plans. So to have this cap of 350,000 will make a significant difference to these individuals' retirement savings.
Just by the way, Treasury doesn't fund anything, we fund everything, and we fund Treasury as well. But the important part is that Treasury wants to throw that tax net a little bit wider, and they want to increase the tax burden, especially on the more affluent.
Yeah, they need to look at this opportunity to make these contributions before the 28th of February.
So if everybody belongs to a share option scheme or a deferred income scheme or whatever, it's important to get all the information and go and speak to your financial advisor before the 28th of February.
Yeah, anybody looking at this insert to get in contact with us, because at the end of the day, it's not only the tax saving, but these investments that you make also doesn't form part of your estate. So you do a little bit of estate planning at the same time. Within these investments, there's no dividend withholding tax, no capital gains tax, and no tax on any interest that you earn. So you would ensure much better returns over the long term with these type of investments.
Very important. Thanks, Martin. There you have it. Go and speak to your financial advisor, Martin Kift. He's the director of Verso Investment Services. He gave us all the important news. So go and talk to your financial advisor before the 28th of February, because nobody should pay more tax than necessary.